Please never ever buy Bitcoin when the long-term holders sell. Don't buy during those green peaks. Never sell Bitcoin when the long-term holders are buying. Don't sell when others are already panicking. Investing is a very strange discipline. It's probably the only discipline where you have to do the exact opposite of what all the other people around you are doing. Think about it. Our survival instinct tells us to always follow, to always go with the trend. This is how fashion trends are formed. This is how hierarchies are formed, and you're following the leadership, etc. You're always trying to fit in to a degree. But if you want to fit in with investing, you're very likely going to make a mistake. You have to think by yourself, and you have to come to conclusions and be right when the masses are wrong. When most people give up on an investment and you buy it anyways, that's when you're likely going to make the gains. When most people are hyped about something and you are selling, then you're making the gains. If you ever went through something like this, you know this is not all sunshine and rainbows. But instead, it's psychologically very, very hard. Buying actually is easier than selling psychologically. To buy something that most people don't have any conviction in is fine. But to sell when everybody is hyped about something, that's the very, very hard part. Let's have a look at when historically people bought and sold Bitcoin. What we've got in black here is the long-term Bitcoin price, right? A logarithmic scale, several years of data. You've probably seen this. What you see in red is the realized loss. So this is when people sold Bitcoin at a loss. So when they're basically panicking. What's in green is the realized profit. So that's when the long-term holders mainly are cashing in, when they are selling. You do not want to sell when others are panicking. You do not want to sell during peaks like this, right? Whenever this red graph spikes over here. You rather want to tend towards buying. You want to go against the masses. But what's even more pronounced is you want to be selling when the long-term holders are selling, but the short-term holders are buying. Long-term holders after a bull run, of course, have more Bitcoin than the short-term holders. They dollar cost averaged in. And so whenever you see a lot of profit taking, when this green line here spikes, that's when you want to sell as well. Those are movements from the few long-term holders that accumulated, that bought many, many times, to the many, many short-term holders that just jump on the Bitcoin train after the media is covering everything. Take profit with the long-term holders. Don't get too excited because everybody talks about Bitcoin. Currently, everything is calm, right? There's nobody panic selling, there's nobody panic buying. But think very deeply why you would be buying when most people are freaking out, when something really, really bad is happening. Let's say Binance goes under. Let's say the Bitcoin ETF doesn't get approved. Let's say all of the traditional banks completely cut off any connection to crypto exchanges, maybe due to legal reasons in many countries. With all of that bad news, would you really
buy the dip?
Let's say Bitcoin falls to 15K. What do you really think will you do during such a time? Why would you be strong enough to buy when everybody around you tells you it's the wrong time, or better, it's the wrong asset? Bitcoin will never recover, move on. Why would you not move on? Why would you double down? You have to answer this for yourself, because once the time comes, there's always emotions involved, and you have to be stronger than your emotions. Your emotions, your natural instinct, tells you to do what everybody else is doing. And overcoming that instinct is even harder when times are hyped. Look at this chart. This is the net unrealized loss or profit. So before we looked at the profit taking and the loss taking, so the realized loss and profit, here we are looking at the unrealized loss and profit. And it's very, very interesting how this tends to peak out at very similar levels. It also tends to bottom out at very similar levels. Do you remember here during the last bull run when we went to 69K in the end? Almost every influencer on YouTube said that the 100K in Bitcoin will come. There were very few YouTubers that were warning about the current prices. Feel free to check out the history of this channel, by the way. When you're running from 10K to 60 something K in the span of less than a year, now of course it seems to be the most reasonable thing to assume that we might do at least another 50%. Profits had been made left and right, first with Bitcoin, then with altcoins. Everybody expected the show to go on for a little bit longer, but what happened? It didn't go on. And in the end, not so many people sold. It's very hard to sell when you currently can make a 2 or 3x on the next meme coin. Very, very few people will look at charts like this during times of hype. And at the same time, there's a lot of money involved as well, right? Let's say you dollar cost average in every month by like, say, $1,000. You do this for 2 or 3 years. You've got invested $36,000. Now the price shoots up and makes maybe a 5x. Suddenly you've got more than 150K laying around. And you have to sell this off, at least partially, during these hyped times when everybody says it continues to go up. The amount that's being involved for selling is much, much higher than the amount involved when buying. You buy in regularly, just $1,000, but when you have to sell quickly because the prices normally are elevated for only a very short, brief period of time. So you're selling maybe 70, maybe 80K, half of your portfolio when everything is really, really hyped. That's what you have to do at least, but you're only buying for $1,000. So it's like an 80x difference in the amount. So buying in 1,000 pretty much brainless is easy. Selling when everybody is focused on making further gains, selling half of your portfolio 80 times potentially the amount is psychologically incredibly hard. Let me tell you how this went for me. I was always scared of buying the top. I actually learned about Bitcoin roughly around here, beginning of 2017, but I didn't buy. I simply thought at some point we might reverse. And I had to wait and wait for quite a long time. And then I started buying roughly here in Q2 of 2018, when Bitcoin was at around 7 to 8K. And I started dollar cost averaging in because I learned about Bitcoin. I learned about the fundamentals. I bought every month and then I took this drop here, this 50% drop. And I was strong enough. I continued dollar cost averaging in. I continued buying even though I was down 50%. I bought and bought and bought. Another drop. This was the COVID crash. I also bought here. And then I stopped buying at around 10 to 15K. Because again, I felt we might not be that low anymore. 20K was the all-time high before. But why do I tell you all of this? In the end, I sold half of my portfolio around here at 52K, I think it was. Why did I do this? We went up very, very quickly here, right? But then the pace at which we grew slowed down significantly. And I sold here during this dip. We slowed down with the growth. Everybody was hyped. Everybody was buying Dogecoin, etc. But I got scared. And I got scared because now crypto, or rather Bitcoin, was a huge fraction of my overall portfolio. So I had some stocks, I had some equity in a house, and I had crypto. And because of the regular dollar cost averaging in and the massive increase in the price, in the end, my crypto portfolio made up for like 70-80% of my entire wealth, while the price didn't move up that much anymore. And we all knew historically that Bitcoin can easily drop
70-80%
from the all-time high. And I didn't want to drop 70-80% from that new all-time high now when so much of my wealth was tied up in this single asset class. And despite this massive pressure, when everybody was so hyped about Bitcoin, when another 2 or 3x would have really changed my standard of living, despite that, I sold. I was more scared of the price drop than I was greedy for the potential opportunity here. And what looks like boring charts here actually are very strong emotions once you work through them. This here just looks like net unrealized profit. I mean, okay, the market is a profit. The line here is relatively high. But what this actually means is that the people that made money are now scared of volatility. People that are that much in profit, when the market in aggregate is that much in unrealized profit, there will be at least portfolio rebalancings happening. And that means the long-term holders that bought in sell it to the short-term holders that just get excited about the new price. The price dips a little bit because the long-term holders rebalance and the short-term holders are very, very scared. They bought in because they thought this rally will continue for longer, which then it doesn't. And so the short-term holders, or rather the new entrants into the space that just got into Bitcoin, they tend to sell as well. They get cold feet. They don't have the strong conviction to buy during bear markets. There's no need to become too technical. There's no need to understand every single nuance of charts like this. What's much more important is to understand the psychology behind this. And net unrealized profits at close to all-time highs are very, very dangerous. Now, once you get into a situation like this, where you hold profit that you haven't seen before ever in your life, you will know what I mean. All of that theory bases around the realized price. So that's the magical moving average you can only calculate with on-chain data. You can't calculate this for the stock market, actually. The realized price is the average price at which Bitcoin has moved the last time. So we look at all of the Bitcoin on the chain and we look at what was the price at which that Bitcoin moved the last time. We average this all out and then we know what's the average price of the market. Is the market in aggregate currently at gains or at losses? Currently, the market is at gains. The current price is above the realized price. The realized price currently being roughly at around 20K. Now that's not necessarily great, right? You rather want to be buying when the market in aggregate is at losses, because then people tend to not really sell. They simply just continue to hold for longer to wait for the next rally. But 20K versus our current price isn't that bad either, because the people that are at profit, they aren't that much at profit that they think they have to rebalance their portfolio. The profit isn't that massive that a 30-40% drop would be too scary for the long-term holders. The extent of unrealized profit, the extent to how much the current price is above the realized price, that's what really matters. Now we all want to know where Bitcoin heads next, but we can't predict the news. Will the Bitcoin ETF get denied? Will CZ get chased by the US Department of Justice? Will Elon Musk end up accepting Bitcoin again as payment? This is what the news suggests. Will Grayscale convert into an ETF? If you believe that Grayscale will also be the next Bitcoin ETF, then you should be buying GBTC rather than just Bitcoin. There's now a discount on buying Bitcoin if you buy instead the GBTC Trust. You can have Bitcoin for 20% less if you buy GBTC instead of just regular BTC. What really matters is the long term. And history shows that we have been pretty good at being contrarian. So feel free to join our Telegram. The link is down below.